Hi everyone, welcome back to my channel. So we have started talking about this customer write-off process, and in a previous video we have covered how to manage the write-off of small balance or penny difference, right? And I'm going to link the video below. If you're interested, please feel free to check it out and leave some comments and subscribe. Alright, so for today's episode, we want to focus on how to do the actual bad debt write-off. Right? So again, we're going to start with the process review, and then I'll show you a couple of configurations as part of the prerequisite. And then finally, I'm going to do an end-to-end demo showing you the different options to write off the whole bad debt, right? Okay, so process-wise, what's the difference between the bad debt write-off and the small balance, right? So in today's episode, we'll see, okay, you have the same ABC Motor Company. They also closed the deal with a total sales of 2,000, adding up 130 sales tax. So far, all good. However, at the moment when you need to collect a payment from the customer, you received a notice saying the customer is out of business for a bankrupt reason or some other financial difficulties that you are no longer able to collect this payment from this customer. Right, so if that's the case, then the accounting team needs to know what are the amounts we're going to write off. So what's the missing portion of accounts receivable, right? And you definitely want to put that part of bad debt, uncollected debt, into a specific account. So for tracking purposes, you would know what needs to be removed from the accounts receivable and what needs to be considered as bad debt. Right? That's a very straightforward overall process. The difference between the penny difference is, for the penny difference, you do receive a payment from customer, but there might be some cents or roundings. You want to write it off and no longer need to collect from the customer. And also one thing to note is writing off bad debt serves the purpose of improving the company's accuracy in accounting. So it does not necessarily remove the customer's obligation to pay, but it only brings visibility to the bad customer debts a company may currently have, right? So having said that, we can continue to see how it's going to be managed within FNO. So from configurations perspective, two things I'm going to show you within AR parameters. First, we need to set up a write-off journal name is one of the regular journal names you're going to set up with a voucher and number sequence, right? And then secondly, you can also define a list of write-off reason codes for tracking purposes. So you know, okay, this write-off is based on short pay, that one is actually goodwill, etc., right? So now I'm going to flip to FNO and let's have a look at the configurations. All right, so I'm going to head to Accounts Receivable, enter Setup, Accounts Receivable Parameters. And here we have a section called Collections. And this is a section actually with the write-off. You can see the first part is the write-off journal. So currently I have already one, and I can show you the details. So it's normal journal name. Within GL, you can get to the journal names and then create this one called write-off, and then that's going to be a daily journal, so that's considered as a same as the GL journal, right? And then from here you can define the voucher series. Let me show you. So currently it says to this specific format, WO write-off journal line, and with alphanumeric numbers. All right, so now let me go back. We have completed the journal name setup together with the voucher. And the second point, as we reviewed in the PowerPoint, we also need to define a list of reason codes. If you have just only one, then certainly that's fine. We can define that as a default one. So let me click on this pencil. That's where we can define that list of your write-off reason codes. But one thing to note is here the reason code is per legal entity, meaning that if for two legal entities, USMF, USRT, if you are going to use the same write-off reason code, then you have to create twice separately for each legal entity. So that's the difference, right? And currently we are in USSI. So those are the two I created. One is for short paid. I need to give a code ID and then the description. Then I can assign a GL account to say, okay, every time when you write out for a short paid, please post to the 618900. And there will be another account to capture the write-off customer balance. That's the write-off reason, right? And you have this default box where you can say, okay, I will set this. Most of my business scenarios are write-off customer balance. Then I'll set it as default, right? And here, actually, it doesn't really engage anything when you set it as default. So at the moment of write-off, you have always the possibility to uncheck this and then select a different reason code to overwrite. So this is just to help you save some time. Okay, so that's about the configuration. Very easy. Now I'm going to go back to my PowerPoint. Let's have a look at the demo, right? I'm going to show you first, there are different ways to write out at different places depending on the scenario. So let's say on a specific customer invoice, you only want to write off that specific invoice per agreement or for some other specific reasons, that you can do that on an individual invoice level. Or you can also say the customer just did a bankrupt, then all the opening balances should be written off. Well, if that's the case, then you can also write off all customer balances from the aged balance. So that's the first point, right? You can also, second point is the individual customer invoice. So all those two operations can be done from aged balance screen. I'm going to show you in a second. Next one, you can also do it through a different screen from open customer invoices. Let's say if you keep track of a list of all open customer invoices, then you can certainly write it off directly from there. You no longer need to generate an aged balance report. Okay, and then finally, you can also write it off from your customer account. So meaning that's your customer master or customer card, you can get to that write-off screen as well. So process-wise, you're going to see once I do that write-off operation, the system is going to create or prepare a GL journal called write-off. That's the journal we just created, right? And then within that journal, you will be able to see the different lines with the balance amounts against the accounts receivable. So from accounting perspective, what do we expect for posting? So I'm going back to this slide. So basically, when you record the sales invoice, it's going to hit your accounts receivable on the debit side, and then recorded the project sales on the credit side as your revenue account, right? And then from there, once you decide to write it off, then the entry to write off the bad debt will consist of two steps. One is a credit to your accounts receivable in order to remove that amount that will not be collected. And then secondly, a debit to your bad debts expense account to report the amount of the loss on the company's income statement, right? So that's basically for the posting. All right, now let's head back to F&O. Okay, so from here, let's do that demo. I'm going to see first scenario. Let's say I just have a specific customer invoice to write off from my aged balance. Then what you can do is here in the credit and collections module, under collections, you have aged balances here. So you might want to first update the balance or the aging. So I can do for the specific customer, or you can also use that batch job to create a customer aging snapshot just to have the most accurate and most updated customer balance, right? So now I will just update aging. Okay, so once it's done, let's say I want to write it off a specific invoice, then I click on this customer name to get into the list of all open transactions. So in my scenario, I just have one open transaction here, but you may have multiple. If that's the case, you can select all of the open invoices or multiple invoices that you want to write off, or just a single one, right? In my case, I'll just pick the single one, and current balance is 2369. And then you see this option write off. Just click on that. So by default, right, we have defined a reason code called write off to cover 80% of the business cases. And if this is not the case, you want to override this reason code, you can also do it through this drop down menu and select short pay. So what is going to change is basically this GL account. Depending on your reason code that you selected, it's going to be posted to this relevant account. So I'm going to select back this write-off reason code. So first you can for sure assign a specific write-off date, right? And that's your GL account together with the description. So if everything looks good, then just hit OK. Now the system is going to generate a GL journal. So that's what you see, the write-off process is complete. And that preparation of journal is ready for you to review. That's going to be under General Ledger and General Journals. So from the description, you will be able to see, okay, this one is for write-off, or also from the journal name. And then you can do lines to check what the system has prepared. Okay, so in my scenario, since I have multiple financial dimensions involved, so it's going to create 3 separate lines for my total balance to 369.8, right? So that's my first line is my customer account type. So that's going to hit the accounts receivable account, basically remove that from the accounts receivable. And then at the same time, the offset would be the P&L for the bad debt write-off loss account. So that's basically the breakdown of this total balance. You can make changes if needed, but if everything looks good, then you can just go ahead and post it. All right, so from here, we can check the voucher. So that's what we have reviewed from the PowerPoint, right? So accounts receivable, that's going to be a debit. And then you're going to have offset as bad debt. And if you have multiple financial dimensions, then it's going to be splitted per line to accommodate the financial dimensions. All right, and this is the first way to write off a specific invoice. The other way, let's say the customer did a bankrupt and you need to write off all open invoices, then the easiest way is to write off the whole balance through age the balance screen. So again, that's going to be credit and collection, age the balances. And now let's see if I want to write off the whole balance here for the brakes and gears, then I can go ahead and on the top level, you also see this write off option. So just click on this write off journal. So it's the same situation, right? You can override. And then if I do select short pay, another GL account is going to be populated. And the same thing, I'll hit OK. Then it's going to process a GL journal. So we can go back to GL and then just double check. Yeah, so this is what you see, the write-off transaction for your customer ID and name. And then you can go lines to further check and post, right? So now we have covered 2 different places to write off depending on the needs. And the third way to write off, let's say if you heavily use the customer open invoices screen, you can also do it through accounts receivable. Under invoices, you have this open customer invoices. So from this list, you can also select one open customer invoice and then do the write-off just here under collect section. It's going to be the same screen suggested as what we reviewed previously, right? And one last way, if you need to do it at the customer level, then let's pick the second customer, ski house, and then you should have the same option under collect. So that's where you can have this write-off option and continue. So if there's nothing to write off, then you're going to see this warning message does not have any transactions to write off. And also a side note here. So if a few invoices have already been settled for the selected customer, the system will pop up a warning message stating that a few of the transactions are settled and closed. So you can write off only open transactions that are not marked for settlement. So that's a side note. And sometimes I also have customer reach out and asking about the tax within the write-off. Is it possible to have a separate line within the write-off journal that system suggested so I can identify the tax account? So to do that, you can adapt or adjust the settings from accounts receivable parameters, and that's the same write-off section under collections here. So you have this option, separate sales tax. If this option is enabled, then within your write-off journal through GL, you're going to find a separate line for your tax amount. So again, depending on how AR team wants to manage it, those are all available design options. All right, so that's everything I want to cover for this scenario, customer write-off for the bad debt. Again, please like, comment, and subscribe if you want to see more content. That will help me a lot to keep going with your kind feedback. Thank you everyone for watching. See you in the next episode.